It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian stocks extending Wall Street's rally as bets pile up that today's US CPI print will pave the way for a Fed rate cut. The Kiwi slides as New Zealand's central bank dives into an easing cycle of its own. Also ahead, Japan set to get a new Prime Minister, Fumio Kishida, stepping aside as leader of the ruling LDP. Plus, the MD of the world's largest aluminium seller gives us their outlook as quarterly profit surges 25%. All right, let's take a look at how markets are doing this Wednesday in the Asia Pacific. Avril Hong's in Singapore. Avril.
Yeah, Paul, what a Wednesday we've been having. I mean, we started the session on the front foot after that miss from US PPI raised those hopes that we're seeing possibly today a cool CPI number out of the US. That's what buoyed stocks in the early stages. But a couple of things then subsequently happened. We had markets kicking off in China and digesting how bank loans there to the real economy contracted for the first time in 19 years, really showing you how weak demand is, and that's playing out in negative sentiment in Chinese equities. But of course, then the RBNZ also cut its rates. This is not what most economists were expecting, and that's playing out cross assets. And the big one, really, PM Kishida stepping aside. We saw the Nikkei erasing gains and slipping into negative territory. That's where it entered the lunch break. The topics also erased gains from earlier in the session. And if you flip the board and take a look at what we're seeing in dollar yen, you might see more closely what we're seeing in terms of the pairing of the losses on the Japanese currency after the news broke, and then it actually went into gains as well against the greenback. Paul.
All right, thanks very much, Avril. Please do stick around. We're going to get the latest now on Japanese Prime Minister Fumio Kishida deciding that he's not going to run for a second term as his party's leader. Our Tokyo Bureau Chief Isabel Reynolds has been following this story. So, Isabel, it's been a rough few months for the Prime Minister dealing with a slush fund scandal. His popularity's been declining, but did this still come as a surprise?
I think it was something of a surprise, especially the timing. To announce it in the middle of what's the kind of summer holidays in Japan is quite an unusual move. The leadership election is still more than a month away, so he could have left it a bit longer. But I guess he saw that the writing was on the wall, so to speak. His support rates have not improved very much over the past few months, despite all his efforts. He's done things like tax rebates. He's offered help with the increased electricity bills in Japan due to inflation and so on. But none of that has really worked. And as you say, those financial scandals have really weighed on his support over the past year or so.
All right, so next month, the LDP will select a new leader. Who are the front runners? Who's likely to be the next Prime Minister?
That is very much an open question still at the moment. We've seen a lot of public opinion polls which show that Shigeru Ishiba, who's a former defense minister, is very much the most popular among the public. But the way this works, this is an election within the ruling party, so it's not always the most popular person with the public who makes it to the top job. But he's certainly one possibility. Other people we've seen as relatively popular are Kono Taro, who we interviewed recently, of course, on Bloomberg Television. He's known for his tough stance on the Bank of Japan. He was urging them to kind of act to help to support the weak yen. Who else have we seen? We've also seen Sanae Takaichi, who is a minister in charge of economic security. She's expressed interest in running. But it's unclear at this point which of these people will get the necessary 20 signatures from within the party to enable them to run in the race.
Isabel, as you alluded to earlier, there has been considerable voter frustration with regards to inflation and where the yen is sitting for who gets the top job and future policy making, regardless of who it is. Do you think that's going to weigh into what we see from Japan's leadership going forward?
Yes, I mean, this is a very difficult situation for any leader to resolve, I think. Kishida has pushed very hard to get companies to raise salaries, and a lot of the larger companies did, in fact, raise salaries. But we've also seen that real incomes have continued to fall, and that's very much caused dissatisfaction among the average household, and also among people who obviously Japan's population is very elderly. Among the many people who live on fixed incomes, life has become harder since Kishida came into power. So whether other leaders will be able to find any solution to that difficult issue is very much an open question.
All right, Tokyo Bureau Chief Isabel Reynolds there. Let's get market implications now. We're joined by Sunil Garg, a Global Head of Research and Investments at Lighthouse Canton, a global investment firm which manages more than $3 billion in assets. Sunil, thanks so much for joining us. I'm just wondering what you make of this decision from Fumio Kishida to step down from the leadership in Japan. Do you anticipate any changes in direction in terms of fiscal policy or perhaps more political upheaval of the bad old days when we had a revolving door of Japanese prime ministers?
I think it's difficult to say whether you're going to get a revolving door, and I certainly don't think this is going to lead to any dramatic changes in fiscal policy, or for that matter, to the extent it matters, even monetary policy. I think that's kind of separate. Does it lead to uncertainty in the short term? Yes, it does. But, as with most geopolitical events, which this would be one, the market impact tends to be relatively short-lasting.
Sunil, what about monetary policy? I mean, there had been speculation that the BOJ was facing political pressure, and maybe that was among the things that weighed into its rate hike last month. But do you think we can see, further tightening within the year from the Bank of Japan?
I would say that there were enough economic reasons for the BOJ to raise rates when they did, rather than, thinking about political pressure. And I think the BOJ is going to be dictated by, what ultimately happens to growth and inflation, rather than trying to link that to politics. Yes, of course, there's always a view expressed by politicians everywhere. But, can we see more rate hikes? I would say probably, but at this point in time, I would say that a lot of it really will depend on whether the inflation does cause them to raise rates. And inflation hasn't really been it has softened recently. So, reduces the reason for them to hike again.
Yes, it's been a day of surprises, really. We also had that rate cut from the RBNZ. I mean, it wasn't completely unexpected, but we're just getting this line from the Governor, Adrian Orr, saying they considered cutting 50 basis points today, but the consensus was for 25. So we've got New Zealand now making a pretty abrupt pivot to easing. To what degree do you think that country might be the canary in the rates coal mine?
Well, I mean, normally New Zealand's not considered the canary in the coal mine. I think there are probably other central banks who are. But I think, what the RBNZ has done really is underscoring, I think, the situation you see in the developed markets, which have had an expansionary economy, and you definitely are looking at a slowdown, which will warrant rate cuts. And I think you've seen how the expectations of a 50 basis point cut by the Fed have now risen from a very low level 2 weeks ago to now about 50%, spiking at one time to over 80% last week. So I do think, we are on a monetary easing cycle across the developed world. But I wouldn't necessarily say that, New Zealand's going to drive that, or there would be the canary in the coal mine, so to speak.
What are you expecting from the Fed come September? Is it going to be 50 or 25?
We are in the 50 basis point camp. I think the Fed missed an opportunity in July. They really should have been preemptive and cut, and I think that's just forcing their hand. You've seen inflation prints come lower, PPI yesterday, and I think the labor market weakness, which came 2 days after the after the FOMC week before last. I do think there is increasing conditions for them to go aggressive at 50 basis points in September.
Well, once again, we seem to have this rather disjointed narrative between what the market thinks and what the Fed is saying. We've heard from Raphael Bostic saying, well, maybe there's a rate cut by the end of the year, but we want to see more data. At the same time, market's already pricing in 100 basis points. Who's wrong?
Well, I mean, at the end of the day, the two have to converge. The reality is the Fed's very much behind the curve. If you look at the rate raising cycle back in 22, they were substantially late. And I think if you look at inflation, it's been on a glide path downwards. And, the other thing that you've got to look at is how the two-year Treasury yield moves ahead of the Fed rate decision. And there's a fairly wide dispersion sitting there right now. So I tend to be a lot more believer in the market rather than necessarily Fed speak, because Fed speak changes with data. And I think the market is anticipating data. So yes, the Fed's going to be guided by data, but I think they're quite substantially behind the curve here.
Sunil, you talk about this disconnect. We're also seeing how equities markets seem to be underpricing a recession versus what we're seeing in the Treasury space. Do you think this heightens the odds that we see a catch-up later on?
Catch up to the recession expectation or catch up in the equity markets?
And an unwinding of, potentially what we're seeing and the concerns coming through about the recession risk and, perhaps a turnaround or a slipping what we see in the equities market, Sunil?
Yeah, we definitely think that the path for equities is, we have a more bearish outlook on equities. And I think it's been building up. We've now seen both labor and consumption data weaken, which really have been the two strongest pillars in the US economy. And, while you will get rate cuts, whether you get 25 or 50 in September becomes a moot point, the reality is that that's not going to be enough to immediately change course. So we do think that, if you go back to expectations of a recession the market had at the beginning of 2023, which have now given way to hardly any talk of that. The reality is very hard to specifically time recessions. I think the trend for the economy is decelerating. It's down. Rates will come down. And I think the equities are unable to, we're seeing a demand weakness coming out from multiple companies which have reported second quarter results. And I think that is really what's shaping our view that we are headed for weaker times in both the economy and equities.
Sunil, you mentioned the two-year yields a moment ago. A good time to put our question of the day to you. How long do you think it's going to be before that yield hits 3%?
The answer to that lies in, watching what the Fed does. The Fed's, expectation, it's expected to come down to 3.5% by middle of next year. And I think the two-year does tend to lead the Fed funds rate. So to get to 3%, I think we will get there before the Fed does.
All right, Sunil Garg of Lighthouse Canton there. We are still watching some of these lines coming out of the press conference with Adrian Orr, the Governor of the Reserve Bank of New Zealand. Of course, with that surprise rate cut of 25 basis points, the New Zealand dollar dropped quite considerably, a further 1%, as Adrian Orr said. Well, we did consider 50 basis points today, but the consensus was around 25. So that takes the cash rate in New Zealand down to 5.25%, and quite the pivot, considering it was only back in May that the RBNZ said it wasn't going to look at easing until 2025, yet here we are. Still to come, we discuss the economic outlook for the Philippines and an exclusive with conglomerate SM Investments. Executive Vice President Franklin Gomez is going to join us. Plus, we will dig into the sector outlook with Satish Pai, MD of Indian metals giant Hindalco, beg your pardon. First, though, another big story of the day. Australia's securities regulator is suing the ASX for allegedly misleading statements. We're going to have more from the ASIC Deputy Chair, Sarah Court, up next. going to be hearing from the Reserve Bank of New Zealand Governor Adrian Orr tomorrow. He will be joining us to give us his thoughts on the outlook for New Zealand's monetary policy, and he is there on the left of your screen at the moment, giving a press conference after that surprise, for some, 25 basis point cut to the cash rate, taking the cash rate down to 5.25%. Adrian Orr said during the press conference that they did consider 50 basis points, and on those remarks the Kiwi dollar slipped a bit further, right now just holding on above 60 US cents. Here's a story we've been tracking in Australia. Meanwhile, the securities regulator is suing the ASX for allegedly misleading statements relating to upgrades of its clearing and settlement system. ASIC says the exchange's claim in February that changes under its so-called CHESS project were progressing well, and they simply weren't true. ASX CEO Helen Lofthouse says the company recognises the serious nature of these proceedings and are cooperating fully with ASIC's investigation. Well, joining us now from Melbourne is Sarah Court, Deputy Chair at the Australian Securities and Investments Commission. Sarah, thank you so much for joining us today. I just want to get to some of your statement. You're saying you're seeking declarations, pecuniary penalty orders, other relief as well from the ASX. What is the maximum penalty in play here?
Look, there are significant penalties that may be available in relation to this misleading conduct that ASIC is alleging today. What we're really concerned about here are statements made to the market back in February 2022 about this very significant critical infrastructure replacement in Australia. Market participants were watching very closely how this important project was progressing, and in February 22, ASX, our market operator, our biggest market operator here in Australia, said that this important project was on track, progressing well and likely to go live in April 2023. So we've taken court proceedings today. We're at early stages of those proceedings. We will be seeking penalties down the track, but as I say, early days, we need to establish the case first, and the court has to find that those statements by the ASX were indeed misleading and deceptive back in February 2022.
Sarah, is a settlement potentially something that ASIC would consider, or are we trying to perhaps establish a record here?
Oh, look, I wouldn't say we're trying to establish a record. What I would say, this is a really unprecedented action by ASIC, the securities regulator here in Australia. So we have a regulatory oversight role of this market operator. We do that in conjunction with our central bank, and we have had concerns over a number of years about the progress and delay in the rollout of this very significant technological project by ASX that, as I say, our market integrity really is dependent on. We have been upping the ante over the last few years in terms of imposing additional licence conditions, requiring the provision of independent people involved in overseeing the ASX and telling ASIC what is going on in terms of this replacement project. Today, though, what we've done is really said, look, when we look back at the statements and representations, excuse me, the market operator made to the market about how this project was progressing, that we have very significant concerns that when it said that this was progressing well, this was on track, that actually was not the case. Now, if ASX ultimately want to concede that, if they want to settle with ASIC, well then obviously we would be open to that. We always are. But at the moment, our focus is on, we've got the evidence, we want to go to court, and we really want the court to make findings in ASIC's favour that this kind of misconduct has occurred.
What's the potential here for this to get bigger, however? Because ASX, of course, has a number of companies which is listed on its platform. It has shareholders of its own. I mean, did ASX mislead them as well? Can you see that this could potentially pave the way for something broader, maybe class action?
Oh, I don't want to speculate on class actions, but what I can say is one of the reasons ASIC has taken this case is because there is a range of implications for all kinds of stakeholders here. So there's the market participants who have to connect into this new system, who were, many of them making their own investments in order to keep pace with the changes that the ASX was proposing to implement. There's ASX's own shareholders, there's other investors. One of our key messages from this case is that we know that technological risk and compliance failures for listed companies are becoming increasingly significant. And so if market participants, ASX listed entities, whether they be the market operator or any other participant in the market, if you are making statements about the progress of technological developments and implementations, you've got to make sure that those statements are right, they're correct at the time that they're made. And as I say, in this circumstance, our view is that the evidence will show that at the time ASX made those clear statements to the market, it wasn't true, this project was not on track, it was not progressing well.
This has also been going on for some time, according to your filing, and I mean, this began really under the former CEO Dominic Stevens, this transition to a new system. Current chair Damien Roche was a big supporter of this. It's continued under a new CEO now, and you note an organisational failure in this respect. Can investors have confidence that reaching a settlement or paying a fine is going to be enough, or does there need to be a complete overhaul of the management?
Look, I'm not going to comment on what's going on internally in ASX. As you say, there has been a number of changes in senior positions over the last few years. What we've really looked at, so we've done an extensive investigation. We've looked very closely at the evidence of and what is, a complex technology, or what was a complex technology upgrade. And what we've concluded, and where that evidence points us to, is this is a collective organisational failure across the ASX, across that corporate entity. We did not find that there was one or two individuals that were responsible for these statements made. We really found the evidence directed us to broader corporate responsibility, and that's why we have sued ASX in its corporate form.
I'm just wondering if there's one other thing you can clear up for us. Norton Rose is ASIC's counsel on this as plaintiff. Just curious why ASIC's not using the Commonwealth Department of Public Prosecution here. Is there a reason?
So this is not a criminal matter, just to be clear. So in Australia, the ASIC investigations can go one of two ways. We can either take civil proceedings or criminal proceedings, and if it's a criminal matter, it goes then to us, Commonwealth Director of Public Prosecutions. This is a matter being taken in the Australian Federal Court. It's a civil claim, and it will be seeking civil pecuniary penalties. That's why we have a law firm acting for us.
All right, Sarah Court, Deputy Chair at ASIC, thank you so much for joining us. We have plenty more to come. This is Bloomberg. So let's check in on how markets are faring. Plenty of news flow for traders to digest today, Avril.
Yeah, there is a lot to go around in terms of market drivers and what to digest. We have markets on the mainland going off to lunch break. The Hong Kong market's still open. Among the stocks that we are focusing on today is that of Tencent ahead of its earnings. It's expected to show sales growth speeding up, and this is thanks in large part potentially because of the popularity of its mobile game Dungeons and Fighters, and it is a game that has topped the charts in terms of spending, in terms of download, and of course, as you see that chart on its buyback plans, that is something that we're going to be keenly focusing on. Bloomberg Intelligence's Robert Lee thinks that we could see Tencent come through with an enhanced buyback plan. For context, Tencent has been leading its peers in terms of share buybacks, and out of the $12.8 billion that it's kind of set aside for this year, it's only used about 60% of that. Let's take a look at assets in Japan as We're back from the lunch break there as well. Of course, earlier today, we saw the news that Prime Minister Kishida would be stepping aside, and Japanese equities that had been running higher because of expectations of Fed rate cuts slipped into negative territory. We're seeing a bit softer on the Nikkei. The yen also seemed to be gaining ground amid a bit of safe haven demand potentially. Let's take a look at some of the other currencies in the Asia Pacific. Among the EM Asia currencies, they've mostly been gaining ground this month because of those Fed rate cut expectations. But some of the ones in focus include the Philippine peso, which just a day ago appreciated to the strongest level we haven't seen since April. And this is against the backdrop of an unexpected pickup in inflation that's kind of denting hopes that we see a rate cut from Banco Central tomorrow. Paul.
All right, let's stay with the Philippines. Our next guest runs the finance operations of one of the country's biggest conglomerates. SM Investments owns banks, shopping malls and property and is seen as a proxy for the Philippine economy more broadly. Joining us exclusively now is their Executive Vice President for Finance, Franklin Gomez. And he's in Hong Kong to speak with institutional investors. Franklin, thank you so much for joining us today. It was just last month that you raised about $500 million from overseas bondholders of the bond market for expansion. What are you looking to use this money for? What are you speaking to investors about in Hong Kong?
Thank you for having me, Paul. We are actually very happy with the reception of the maiden issuance of our 500 million European medium-term notes. As you can see, the potential for growth of all our businesses, be it in retail, banking, or in property, they're enormous. In retail, there's only about a third of the retailing market in the Philippines that are in modern trade. For property, the periphery, the regions are growing significantly faster now than Metro Manila, so that is a big room for expansion for us. In our banks, we continue to expand our network as only about a third of Filipinos still have bank accounts. So, and we also look into investing in some of our portfolio companies, be it in logistics, considering that the Philippines is comprised of 7,600 islands, and we do need an extensive network to connect them with each other. And also we are investing in our sustainability agenda, and we have made an investment in a geothermal company which actually will add to the renewable sources for the government. So this expansion will continue to require financing, and we are broadening our portfolio of sources of funding so that our expansion plans will go unabated.
So is the $500 million issuance likely to be the last for the year that you're going to tap on the borrowing, or are we going to see a lot more in terms of international debt market tapping?
It will all depends on the economics of the sources of debt. The 500 is but a part of the $3 billion European medium-term note program, so we do expect to tap on this when market conditions are favorable. But suffice to say, at the moment, this is really going to partly refinancing and capital expenditures. But even with this issuance, the leverage of SM Investments, it's very, very low. Our debt to equity is currently at 1:2. For every dollar of debt, we have $2 of equity, and that is on the basis of a balance sheet where our assets are at their historical cost. So if you do a fair valuation of our assets, the leverage numbers would even, in fact, be much better than 1:2.
Franklin, are there any new businesses that you're considering to bring into the fold? Any M&A plans that you can share with us?
Right now, we are really focused on growing our core businesses in retail, in banking, and in property. And also we have made, as I've said, we have made investments in fast-growing portfolio companies, specifically logistics and renewable energy. So I think we have our hands full, but we do continue to look at the opportunities that may come up. And we're for as long as they will have some adjacencies to our core business and it will add to the ecosystem of the whole group, that we would want to consider as well.
Franklin, as we mentioned, SM Investments is seen as something as a proxy for the Philippines economy more broadly. So I just wonder if you can give us a bit of commentary around the latest Philippine GDP figures. They do show a little bit of a slowing, weakening of consumer spending, particularly around clothing and footwear. Is that a concern for you? Where do you see things heading?
I think we did have a very strong Q2 number, GDP growth at 6.3%. The private consumption growth at 4.6% is slightly lower than the average, about 5.5% to 7% traditionally. But we just have to see that the spending on the discretionary bit is actually growing 7%, while the spending on staples is at the lower 2.9%. And obviously, the spending on staples are largely impacted by inflation. So there is a decoupling of spending patterns amongst consumers with higher disposable incomes, and for that the spending on fashion, branded fashion, continues to be very strong for us. Beauty, wellness have been very strong for us, so it is very positive. But for some of our food business in groceries, where we cater to a broader part of the market, then we can see some consolidation with spending into the staples.
Well, how's this going to affect SM's bottom line? Because you're the biggest company in the Philippines by market value. Do you see that impacting your own outlook? But a lot of your earnings, a lot of your success came from banking and property in the first half.
We are quite optimistic with our potential for growth because there's huge room for us to grow our footprint. So I think that from an earnings point of view, for as long as we continue on this path of expansion, we should see improvement in our profitability over time. We're very patient in investing. We're very patient in building our portfolio, and this formula has done very well for the group for the last 60 years, and we're sticking to the same formula. We have a very strong belief in the Philippines. The economy is very strong. If you look at the GDP of the Philippines for the last 26 years, we only dipped twice. One after the financial crisis, in the Asian financial crisis in '97, and again in COVID. Between that, the economy has been growing 5 to 7%. 75% of the economy is driven by private consumption, and the elements supporting private consumption has been very strong. We have record low unemployment at less than 4.3%. Our remittances from overseas Filipino workers continue to grow at mid-singles in dollar terms, and the income as well from the BPO sector continues to be strong, and they continue to add to the workforce year on year by about 1.8 to 2 million Filipinos. So the elements supporting consumption are in place, and for that we can be optimistic with the way forward. Of course, there will be bumps along the road. It was never smooth, but in the longer term, I think we are in a very good stead. And again, I'd probably highlight as well that 60% of our population are under the age of 30, and our median age is 24 and a half. So we are seeing this strong demographic dividend that is going to fuel consumption as we move forward.
Franklin, in terms of bumps in the road, as you mentioned, and looking at remittances, we're also seeing the appreciation of the currency. Do you think that might have a knock-on effect on remittances, and in turn, potentially this domestic pillar of consumption? Is there going to be a bit of an effect, you think, on SM's malls, retail's businesses?
No, if at all, if there is an appreciation of the peso, I think it should bode well for the Filipinos in general, because what's driving our inflation is also food. And we are importing rice, and we are also importing fuel oil. So that should ease the inflationary pressure and should translate to a higher disposable income for consumers. So I think, if at all, it should be positive for the Filipino consumer.
All right, Franklin Gomez of SM Investments, the biggest company in the Philippines by market value. Thank you so much for joining us today. Still to come, we will be speaking with Hindalco Industries Managing Director. Stay with us for that conversation. This is Bloomberg. Welcome back. You are watching the India Focus. Here's a look at Indian markets just ahead of the open, about 2.5 minutes away. We are, of course, in earnings season in India, as we are in many other parts of the world. And among those reporting, Indian metals giant Hindalco posting a 25% surge in its first quarter profit, and that's thanks largely to rising aluminium prices. So let's get some more details on this with Bloomberg's Menika Doshi joining us from Mumbai. Menika.
Good morning, Paul. That's right. It's higher prices that have helped boost Hindalco's top line as well as earnings. We've seen higher prices in the upstream business. We've seen stable to growing shipments, depending on which business segment you speak of. There has been a small flood-related charge when it comes to their subsidiary Novelis's Switzerland plant. But all of that said and done, we have Satish Pai, the Managing Director of Hindalco, joining us this morning. So let's hear it from him on what he expects will be the price outlook in the months to come. Satish, welcome to the show. You've said in your commentary post-earnings yesterday that demand looks good, but it's prices that you're concerned about. How sustainable are these for both aluminium and copper? It does seem in your investor presentation that global production increases are outpacing marginally global consumption growth.
Yeah, I really think that the pricing of whether it's aluminium or copper are not really driven at this stage much by the supply and demand, because both metals, if you look at aluminium and copper, are fairly well balanced in the market today. I think what's driving the prices more is macroeconomics and geopolitical events. LME, as you said, we had a good first quarter with average metal prices of aluminium at $2,500. But then in the month of July, they dropped back down to $2,200 and are trading at $2,300. So what really happened? Chinese GDP numbers came out, the US jobless report came out, and these sort of moderated the commodity prices. So I think we are in that phase where it's not really supply and demand or production of the metal, it's more macroeconomic events that by sentiment are driving the prices of the commodity.
Fair enough. You spoke of China. I want to ask you a quick question on imports. I think from a domestic aluminium point of view, non-scrap imports were rising. Is this significant right now?
I don't think it's that significant, but it's certainly something that worries us. And why it worries us is because the US is going to put more and more restrictions on Chinese metal coming there. And the European Union, economically is not doing that great. So there is a lot of excess capacity, as you know, in the metals industry in China. And I think that one of the best growing markets and that's really expanding is India. So we are a little bit worried about being flooded with imports. So yes.
Satish, can you talk about where you see the maximum growth in demand in the months to come, despite the geopolitical environment you spoke of, across your various consumer segments? Because you have said that, most of the capital formation phase is now coming to a close, and you expect to explore further growth opportunities, at least in the upstream business from here on.
Yeah, I think that, when you look at the upstream projects are in India. So let me talk about the Indian market a little bit. The aluminium demand in India in quarter one, year on year, grew by 15%, and the copper demand grew by 11%. So what we're seeing in India right now is a huge growth, because normally the Indian growth is around 7 to 8%. Whereas this time we are seeing double-digit growth for metals. So this is very exciting for us, and hence we would like to make sure that we can meet that demand for metal in India. So while we had invested heavily in the downstream for the last 3 or 4 years, now going forward, we also need to expand the capacity to produce raw or ingot form of aluminium. So hence our focus going forward is going to be on the upstream. But just one more comment on demand. If I look at Novelis and I look worldwide, whether it's the packaging, which is can, whether it is automotive, whether it's aerospace, or whether it's building and constructions, we are seeing very good market demand across all these sectors that we play in.
Then what explains why you've delayed the Novelis IPO, Satish? And can you give us a timeline on when you expect it to hit the market?
So the Novelis IPO is very simple. We went for an IPO to get a premium valuation for Novelis. We do not need the money for the Hindalco operations in India. So, and when we went for the IPO in those market conditions, we could not get that premium valuation. So timeline, we will assess market conditions, but our aim in any IPO of Novelis is to get that premium valuation which we think Novelis deserves.
But based on your outlook that you've just shared, there is some degree of uncertainty on prices with regards to the global geopolitical environment. And though demand is strong, there are, the US elections that everyone's watching to see. So are you expecting that now this IPO would probably happen only in the first quarter of the next calendar year?
Well, I don't want to give any timeline, but it would be fair to say that any next attempt we make will be next year, yes.
Any next attempt you make will be next year?
Yes.
Okay. Can I get an update on your decarbonization plans? You already tied up about 100 megawatt in terms of renewable power round the clock. How much more do you need to add to that renewable power source to have 30% of your energy requirements turn green by 2030, which is the company target?
Yeah, I think that, we are going to be around 300 megawatts of renewable power, which is roughly 12 to 14% of our current power consumption by March 31st, 2025. So we need to get another couple of 100 megawatts, which we have the contracts already in place. So I think that next 2 years are going to be critical for us as we bring in more of the renewable with pumped hydro as a backup to get what we call round-the-clock power for our smelters. So in our renewable journey, we are on track to meet the targets that we set out for ourselves. But next 2 years are going to be fairly critical in that journey to get to that 30% of the metal that we produce being low carbon.
Okay, I've just got a couple of minutes left, so I'll circle back to the Novelis IPO since you were candid about the timeline, Satish. Can you give us a sense of what you mean when you say premium valuations? What was the market able to offer you in all of your conversations with bankers and investors, and what were you looking for?
Well, I'll just give you the broad contours of our discussion. So normally downstream aluminium companies trade at an EBITDA multiple. And we believe that in the existing SOTP, some of the parts of the Hindalco stock, there is a valuation for Novelis. So our whole point of an IPO was to get a higher multiple than that which is already prevalent, because once you list Novelis, then people get a pure play downstream company to invest in. So really what we are saying is that we would need to see a multiple that is better than what is already built into the SOTP in the Hindalco stock today. I hope that helps.
All right. All right, thank you. One final question. You've seen the Supreme Court decision in India where the court has deemed it legal for states to levy or impose an additional levy on mining. You mine across 4 states in India. Are you expecting any significant additional levies to come into play, at least in this financial year, or will it only be in the next, and any amounts or ranges that you're working with?
No, I think that it'd be fair to say that we are waiting with a little bit of anxious feelings in our stomachs, because while we are not worried about the retrospective part of the tax, we really don't have an exposure. But on a prospective basis, we do hope that between the state and the central governments, the industry does not get burdened by too much more taxation, because we need more mines to be open. We need more metals for India as the growth happens. So I think that we hope that there will be some amount of stability to be given as far as taxation goes. So we'll have to wait and see is what I say, but we are quite nervous about what can happen.
Appreciate that. Thank you, Satish, for joining us this morning and for all the candor. Satish Pai there, Managing Director of Hindalco, speaking to us about the company's outlook and indicating that the Novelis IPO now will probably next be attempted next calendar year.
Thank you.
All right, thanks very much, Manika. We do have plenty more to come on Bloomberg, including coffee. Stay with us. Right, Starbucks shares jumped after the firm ousted its CEO and hired Chipotle's Brian Niccol as its next leader. Niccol starts his new role next month. And the shake-up at Starbucks comes as the chain looks to make inroads into India, traditionally a nation of tea drinkers. Tata Starbucks CEO Sushant Dash told us about their strategy.
We'll continue to experiment, we'll continue to open new formats and we'll go wherever a consumer is. And the size of the store, again, depends, as I said, in terms of the demand, and it depends in terms of availability of the supply side. Because in India, the supply is a challenge in many ways. So you will need to see what supply is available, and depending on that, we will decide on terms of the size of the format. But the other thing that we will also do in terms of format, because you asked me this question, is one is from a size perspective and from a consumer perspective. But the consumer these days also wants formats which are, in a sense, better for the planet, more sustainable. So some of the things that we have done in terms of store types, one is we obviously made a commitment in terms of diversity and inclusion. We said that 40% of our workforce will be women. As part of that, we already have 30 all-women stores. We have now 4 to 5 stores with signing partners, 70% plus partners being signing partners. We have just opened our first green store. So that again will be another set of or types of stores when it comes to format, and that is part of the larger commitment to the planet.